Hey everybody, my name is Justin. Today I want to do another video on Ascent Solar Technologies, ticker symbol ASTI. I just want to first thank one of my subscribers, Saltwater. Thank you so much for sending me the link to this article that we're going to go over today. So this article is from Seeking Alpha. This is an author that has a pretty bearish take on Ascent Solar. So we're going to go through several different parts of the article. I've read all the way through it, and I'll kind of give you guys my opinion, whether validity to his opinion about Ascent Solar. So if you guys get some value out of this, smash that thumbs up button. It really helps out the channel a lot. So let's just jump right into this. All right, so this article written by Shock Exchange here. So when I first read a bearish article like this, I want to know who this person is. I want to know, do they have skin in the game? Do they have an agenda going on? You know, that's my first thing that's kind of going in the back of my mind. So I did research on this. I don't know if it's a gentleman or a woman, I'm not sure. They do have over 10,000 followers on Seeking Alpha, which is a pretty high number overall. Now, he or she does put out articles virtually every day on Seeking Alpha, positive and negative. And I gotta say, reading through some of the articles, they were pretty good. I don't think this person has an agenda with Ascent Solar. I don't think they're trying to short the company. In fact, they say at the end of the article, they have no position in Ascent Solar Technologies. So I just think it's really their opinion about it. And they do have a private Discord, and that's kind of where this company came up in. And they just kind of just determined in that Discord that this company could potentially be on its last legs. That's the name of the article. So let's just kind of go through a few things on here, and I'll kind of give you guys my opinion. So this first one here, they say, the damage done by the pandemic may have caused irreparable harm for Ascent Solar Technologies, ticker symbol ASTI. The company was formed in 2005 after IT and Energy Systems spun off its advanced photovoltaic PV division. PV uses solar panels to store light and turn into electricity. ASTI continues to manufacture PV power applications for commercial and military use. However, the company has struggled for years. So I think there's some truth, and then I think there's some things that are not the truth in this. So first off, I would say the thing that is not true, when they say the damage done by the pandemic may have caused irreparable harm to Ascent Solar. So this company has been kind of on the decline for a few years now, and that's what I do agree with. When they're saying they've been struggling for years. So, the company back in 2017 sold their Enerplex brand, which was their main product of the company. They were solar panels you could roll out, you could use for camping. They had different products that they could use on the phone to charge your phone. They ended up, I thought they sold it. This article says they discontinued it. I think they actually sold that brand. They don't have it anymore, but they went from $1.7 million of revenue all the way down to just over $500,000. So selling that really hurt them on the top line, but this company is trying to transition to military use. They can use kind of a top tier margin, so they can get more money on the top line and the bottom line by going to the military use. In fact, they announced here recently that they have NASA demonstrations. They have a launch of some solar cruisers going out into 2022. However, we don't know the dollar amounts that are associated with those. So the one thing the author doesn't talk about is this transition that they're making to military, which is going to create higher margins for Ascent Solar. Let's kind of go on here. So they talk about R&D and SG&A costs were combined of $1.3 million in Q1 2021 versus $229,000 the year earlier. And that's just because in 2020 and even a good chunk of 2019, the company decided they needed to conserve cash. They let it go of well over 90% of their employees, and they just kind of sat back and conserved cash the best that they could. And now that they've got some equity, which we'll talk about here in a second, they have more money on their books that they can use to start picking up their R&D. They've been hiring some more people here in the last month. I think I saw 7 or 8 here recently, positions on Indeed that they're trying to hire people. So they're trying to get things going overall. Now they say AST's gross profit is not robust enough to cover its R&D and SG&A costs. Until then, the company will likely continue to generate operating losses. Secondly, ASTI incurred interest expense of $562,000. Until the company can generate positive EBITDA, it will not be able to cover its interest costs. So I agree with this. So the company has $562,000 roughly interest that they're paying on their debt on a quarterly basis right now. Now, the company, which they'll talk about here in the next paragraph, is that they were able to drum up a lot of equity. So Tube Solar, CrowdX bought into the company. They also did additional equity offerings. So they were able to boost their cash by well over $3 million. But I even said in a previous video that they're going to run out by the end of the third quarter based on the loss of cash flow they have going on their book. So they're going to have to drum up more equity before the end of the year, unless they come up with a massive contract that they're going to be in trouble cash-wise overall. And so they go on and they talk about, impaired balance sheet. Now, they do say that the company did get their balance sheet, better in order compared to Q1 2020. Like I just said, with the equity offering, they paid off some of their convertible notes, which I talked about in a previous video, but they still have a lot of debt on their books. I think like around $8 million worth overall. Now they said the equity raised helped the company continue operating and avoid liquidity shortfall. However, the company's liabilities will still exceed its assets. Secondly, negative cash flow could continue to drain liquidity for the rest of the year. I do agree that's most likely going to happen. So they say, is ASTI going concern? So basically, is ASTI going to continue being a company, continue to be able to have enough cash going forward into the future? ASTI is in a financial straits, they say, and there's no guarantee the company can improve operations enough to grow liquidity. There's also no assurance that ASTI's liquidity is enough to sustain over the long term. And then they go on and they talk about different parts of the 10K where the company does talk about that they just don't have enough liquidity on their books and they're going to have to raise more capital, which I talked about in a previous video. That's kind of what all this stuff is here. One important thing to know, and I talked about this on a previous video, if ASTI cannot garner additional capital, then the company would run out of liquidity. As its current cash burn rate, the company's liquidity may not last very long. I think it's going to end at the third quarter. The question remains, why would investors put more equity into a company that is cash flow negative and was unable to generate positive cash flow in previous years when its revenue base was much larger? So that is a valid question to ask, but there's a big piece here that he's still missing or she is not talking about. So let's continue and we'll come back to that piece that this person is missing. ASTI share price may seem cheap since it trades at pennies on the dollar. However, based on traditional metrics, and this is what's key, the company's valuation is nonsensical. ASTI has an equity market capitalization of $402 million and an enterprise value of $407 million. Its last 12 months EBITDA was negative $2 million, so traditional valuation metrics do not apply for this stock. So this person, this is what I read in their other articles as well too. They're coming from traditional metrics, traditional analytics. That's how I also view companies as well. So I can understand where this person is coming from. They're kind of saying, I don't understand. This company's never made a profit. Their revenue has gone from 1.7 million down to a couple 100,000. I don't understand why people are putting money into this company. And again, they're still missing a big piece, which we'll talk about here just in a second or two. So they go on and they talk about valuations for First Solar, talk about valuations for Next Era. So these are established companies. So to me, it's kind of comparing apples to oranges right now, but I understand why this author is doing that. He goes on to say, or she goes on to say, as investors become more aware of how badly mispriced the stock is, I expect ASTI to trade lower. I cannot foresee any scenario where the company could survive without a dilutive event, which I do agree with. The company needs new equity capital in order to survive. Its current cash burn rate, ASTI could burn another $6 million by the end of the year, it is likely it needs $2 million in new money, $6 million cash burn, less $3.7 million cash on its balance sheet in order to stay afloat. I actually agree with that, and actually it may be more than that with the additional people that they're hiring. So I actually agree with that paragraph. At its current share price, 2 cents, the company would have to issue 91 million new shares to raise $2 million. This assumes the shares would not fall immediately upon the news of an equity raise. Technically, the stock could trade higher in the hope that new money would help the company survive. And they basically said their conclusion, AST is on its last leg, sell the stock. So there's a big piece this person is missing. And that big piece is, and I probably can already hear people yelling through the camera right now for this screen, they're saying, hey, what about Tube Solar, CrowdX? This person doesn't mention anything about that. I think that is what the X factor is for Ascent Solar. For me personally, I have no idea what CrowdX and Tube Solar's plan is for Ascent Solar. So keep in mind that CrowdX Tube Solar is owned by a billionaire in Germany who owns solar companies himself. Since he owns those two companies, and those two companies have almost a 60% voting right into Ascent Solar, he controls Ascent Solar. So nowhere in this article does it talk about Tube Solar, CrowdX, and the billionaire that owns both those companies. I think that is a big key here. I don't know what Tube Solar and CrowdX vision is of Ascent Solar, where they want it to go, or the billionaire, what his plans are for Ascent Solar. But that's a big key here, because they really kept Ascent Solar from going completely bankrupt by putting money into Ascent Solar. Now, I've talked about in previous videos that there is a ton of convertible notes on Ascent Solar's books right now that CrowdX and Tube Solar own. In fact, if those get converted to stock, it's like 145 billion shares. Now, I don't think 145 billion shares will get issued. They would probably have to do a reverse stock split and a bunch of other things to get that number of stock down, because they can only offer 20 billion based on their current company structure and what has been approved by the board as it is. So here's kind of my whole take on this article. I do think this person is just giving their opinion. I don't think they have a dog in the race here. I don't think that they have an agenda. I just think that this is truly what they believe, and they're coming from a fundamental analysis standpoint. If you do that, yeah, Ascent Solar makes absolutely no sense at all, because $200,000 of revenue last quarter, $1.3 million of R&D costs alone. So, it doesn't make sense. So, but people that have bought into Ascent Solar, believe that the Ascent Solar is going to be going, bigger into the future. And I think Tube Solar and CrowdX has a lot to do with that. Now, a lot of people have asked me why I have not bought into Ascent Solar myself. And there's a couple of reasons why. So the first is, I don't feel like the management is really transparent to its shareholders. So, and I'm really talking towards the CEO specifically. Mr. Lee come out and said, hey, they had the biggest commercial order in their history, but doesn't talk about dollars. He comes out and talks about, hey, we have these NASA demonstrations that NASA picked us to do in these solar cruisers in 2022. No dollar amounts associated with this. So for me, it's kind of like, okay, you're giving this great news, but then there's not the other piece of it. And so I think, I think that's leaving out information that shareholders need personally. Not only that, but the amount of, stock that they've issued already. You're talking 18.3 billion shares as of the last quarter, and they have another 145 billion that could be issued based on the convertible notes right now. To me, it just doesn't make a whole lot of sense. Even at 2 cents, it doesn't make any sense. Now, if we find out that they have, this commercial, bill that they have is worth, $10 million, and this NASA thing that's in a couple of years is worth another 20 million, maybe that definitely starts, well, I won't say maybe, but that definitely starts changing things overall. But that's just kind of my thoughts. I do think there's a lot of validity to this article, but leaving out Tube Solar and CrowdX was a big deal, I personally think. So that's kind of my personal opinions. What do you guys think about this article? What do you think about the author? Have you heard of him before? I love to hear from you guys in the comment section. Thank you so much for watching me. I really appreciate it. I'll catch you guys on the other side. Take care, and God bless.